Hi guys, and welcome to Money Control. I'm Karunya Rao, and joining me today are two guests to help us understand what's happening in the IT space in the backdrop of earning, what you should be doing if you want to buy, sell, or continue to hold your investment in IT stocks. Ruchit Jain is here from 5paisa and Madhuchanda from MC Pro. Guys, thank you so much for taking time out. Officially, the earning season has been started with TCS reporting its numbers yesterday. Madhu, I'll start with you. I think the street is giving it a mixed reaction, and that's what we're witnessing on the stock price as well. It opened lower. Right now, it has recovered. It's back in the green, but still a quiet open to the behemoth stock after its Q4 numbers. How are you reading into the performance?
I honestly wouldn't go much with the stock price reaction today because the market mood is a little hesitant after, what the overnight declines that we have seen in the US markets. So today's stock price reaction is not really a verdict on TCS Q4, which according to us was pretty steady in terms of execution. But there were two pieces of good news, which is one being the demand environment is extremely strong. In fact, the management said that it is stronger now than what it was a year ago. And it is reflected in the very, very robust deal flow, which is the highest in TCS's history at 11.3 billion. And even excluding the large deals, it was 9.5 billion, which was all-time high. While margin pressures would continue for a while, but there is light at the end of the tunnel because they expect that on the back of the record hiring that they have done so far, and it's an industry-wide trend. Everyone has hired a lot. They expect the supply side pressure to cool off somewhere in the second half of FY23. So all in all, I would see that this is good news from IT.
The larger trend in the IT industry, wherein you know revenue growth is slowing down. Margin headwinds is something that everybody is expecting. Of course, there are elevated expectations, elevated valuations that are already at play when it comes to IT companies. So talk to us about the trend that you foresee for Q4 earnings and beyond for the industry, and especially for the larger players.
See, there are a couple of things that we have to remember. TCS's sequential growth in earnings was, in terms of execution, was not disappointing. I mean, they clocked 2.6% kind of a sequential dollar revenue growth, which was 3.2% in terms of constant currency. We have to remember that this time, Q3, although it's usually a seasonally weak quarter, Q3 was better than other Q3s. So on a sequential basis, the growth looks a tad muted, but that's not a matter of concern because if you look at the demand side, as long as they are getting orders and they're getting all kinds of orders, so there is no issue on the demand side. Of course, margin is a concern. Uh, Margin has not looked up because the supply side issues are still lingering. But the good news is the commentary. If you look at TCS, they have said yes, their attrition on the LTM basis, last 12-month basis, has inched up. But they see a kind of plateauing of the attrition in terms of, the quarterly annualized basis. And they definitely see the supply side pressure easing. And that's why they kind of stuck to the aspirational margin, which is 26 to 28%. And I think that is actually overall good news. If you ask me what it means for the IT sector in general for Q4 and beyond, for me there are two key takeaways. With IT stocks had run up quite a bit. Of course, they have cooled down in the last 3 months. In fact, TCS has been an underperformer in the last 1 year also. But given that many of them, especially the mid-tier IT pack, had been trading at a very elevated valuation, the two pieces of good news for us. One is the demand environment continues to remain strong. And the second thing is the supply pressure is kind of easing. marginally, and we should see the supply pressure easing substantially perhaps by the end of FY23, and that could be a big lever for margin.
I wanted to understand, are you equally bullish on the IT sector from a technical standpoint? Because yes, the sector and many of these heavyweights have been underperforming for quite a few months now. What do you foresee within the top 3-4 names, whether it's TCS, Infosys, Wipro, Tech Mahindra? How are they looking on the charts? TCS, of course, you've told us. If you could shed some light on the bigger trend and maybe the Nifty IT trend as well that you can project.
Yeah, so although if you look at the broader picture, the longer term trend for the IT space still continues to remain positive. But within this long term uptrend, what we are witnessing is a short term corrective phase. And I think this should get completed somewhere around the 33,500 mark. So in the very short term, we are expecting another 1,000 odd point correction, 500 to 1,000 odd point correction in the Nifty IT Index. So I think if one is looking from a trading perspective from this next few days, which would see many of the companies coming out with the results, then I don't think we would see any significant positive reaction to the results until the Nifty IT space completes this correction. So I think buy on dip approach should be kept for medium term, and when the index comes around 33,500, that would be the level where some contra trades should be taken. So for now, I would wait for some more decline in the IT space, maybe around 33,500 in the Nifty IT index. That would be a good time to take some contra bets.
Okay, all right, makes sense. Madhu, I want to get in your perspective on the valuations as well. Indian IT sector trading approximately at 26 times 1 year forward PE versus past 10-year PE of 18x. Is much of the growth and much of this earning expectations already factored in? What is your view on the valuations?
See, IT sector has seen a transformation. So if you compare, the last 2 years with the last 5-7 years, that wouldn't be actually a right comparison, because we are seeing kind of 7-8 years demand getting compressed to 2 to 3 years. So there is a kind of a hyper growth that you have already started seeing, and you're going to see for some more time. So the best way to look at, of course, the initial re-rating of IT, which started post-pandemic, has happened. But does that mean that IT, there is no upside left? Certainly not. The way to look at and the way to approach the IT sector for investors is to look at the kind of earnings growth. Even if there is no valuation re-rating from this point in time, the companies will at least give a return which is mimicking their earnings growth. And that could be mid-teens for some large IT companies. That could be well in the 20s, even in the mid-20s for some of the mid-cap companies. And I think that's the way to look at IT sector.
Okay. But given the valuations that they're trading at and the outlook that you have highlighted and the growth prospects for the sector and several of these companies, would you park your money in some of these bigger players, or is it the mid-cap IT that looks more attractive to you right now?
Honestly speaking, I would go with mid-cap IT, and the reasons are very clear. See, the good news from the sector, which is kind of coming out from TCS result, and I think that's the most important thing to watch out for, even when Infi comes out with its numbers tomorrow. That is, the demand environment continues to remain strong, and as long as the demand environment continues to remain strong, the large players will definitely reap the benefits, and the smaller players have already done better, because the market is full of much smaller deals, and they are nimble footed, agile, they don't have legacy, so they have really grabbed market share in the last 2 years. And another point which really can go in favor of some of the middle and smaller companies is when the supply crunch is easing from the large cap players, it spells good news for smaller companies. They will also reap the benefit of the easing supply situation. So growth any day will be higher because of the smaller base, obviously, and the opportunity being presented to all. So I think in the last 3 months, many of the mid-cap IT stocks have also cooled off. So, if this kind of consolidation correction phase continues, and if the earnings growth and the outlook is solid, I think that is a place to be.
And Ruchit, do you have any favorites from the IT space, whether it's smaller companies or the heavyweights?
One of the IT stock, Tata Elxsi, I would comment on, which definitely has bucked this trend, and in spite of all the correction, in other heavyweight names, I think this stock has managed to do quite well recently. So I think, no, I don't think there would be much downside in this stock from current levels. Probably 8400, 8500 would be the good range to look to buy again this stock. So we are bullish on Tata Elxsi within this space, which should be one of the stock, to buy on any kind of declines around 8400. Apart from this, if just whenever the index completes this corrective phase, I think heavyweights such as TCS or Infosys would be the names where we should look for some reversal signs. Of course, no, not at current levels, but I'm speaking that when the Nifty IT Index comes around that 33,500 mark, because the leadership would definitely come from the large cap space, whenever there would be reversals, and then the follow up move would be there thereafter in the mid cap space. So large cap such as TCS and Infosys definitely should be a radar at lower levels, and Tata Elxsi would be the one name which definitely looks good and should continue its outperformance.
All right, so there you have it. The views coming in from a technical expert and our very in-house expert Madhuchanda, who's tracking the IT space very closely. Thank you guys for joining in and for helping us understand the big trends and the way forward.